There's a lot of reasons to be concerned about the real estate market right now in Spokane, but it's not necessarily what you think. My concern for the real estate market in Spokane right now is that we are going to be crashing up. We're going to have an upwards crash. Now, what do I mean by an upwards crash? If you look at the stats, we're going to get into the stats on the Spokane market in a minute, but when you look at the stats and dig into the numbers and the overall economy and things of that nature, what you see is that prices are not going down, and there's really not an ability for prices to go down. Now, I will have a little asterisk on that statement, and that is if you're watching the overall world economic picture, you're looking at global debt, you're looking at all of those things, you're probably worried about an overall crash of the entire markets. If that was to happen, if we were to have an overall crash of the entire markets, yeah, then you're going to see real estate go down. You might see a massive correction in real estate. What's massive? 30, 35, 40%. That would be massive. But that is if everything goes down. Now, let's say everything was to crash down like that in the overall economy coming down. Real estate's probably still your safest bet. Hard assets are probably the place you want to be. I wouldn't want to be in stocks if you're going to see an overall crash of that nature. Real estate is not going to zero out. Some stocks can actually go down pretty far. If real estate was to go down, let's say even 40%, that would be absolutely catastrophic for the market, but you would recover from that. It would take a few years, but you could bounce back from a 40% market drop. Now, let's step back for a second and let's not look at that sort of overall global economic crash. Let's assume that the standard, economic model is going to apply. We're coming into an election year. Usually during an election year, they try and rally the stock market a little bit. This case, this election's 2024 is just going to be a wild year. I don't see that necessarily happening. When you look at like Jerome Powell, it looks like his biggest fear isn't the election, it's inflation and getting that under control. If he's going to tackle that completely, then he's probably not going to be lowering interest rates in the next year to rally the stock market. Now, I know, for example, he's a stock market guy. He comes from private investment. Guy's worth like $100 million. Fair enough. But really what he's doing by keeping, interest rates as high as they are and keeping them there for a while, which I hope he does. I'll get to that in a second. But keeping interest rates high, that's what's that's what's battling inflation. Also, it is absolutely causing a wreck over on the euro side of things. And what he's doing, it looks like, is keeping sort of a dollar supremacy. There's a lot of things going on with, global money. You've probably heard of BRICS, taking over or attempting to, challenge us for the reserve currency. There's not enough of those dollars around to actually fund the world. But, keeping interest rates high is keeping the dollar in that sort of dollar supremacy. Now, Jerome Powell, I'm not going to ever call him some super patriot, but I don't know if you know this, he's a Mayflower family. His lineage tracks back to the Mayflower. So, do I see him as like the globalist boogeyman that people worry about? I don't see Powell as that. I see him as, trying to keep the dollar supremacy at his forefront and really going after inflation because that's his primary job, is to keep inflation low. Now, prices going down. People are always asking, well, what's going to bring prices down? The leading indicator that you should watch for if you want to see if prices are going to go down, it's going to be unemployment. That is the only thing that really is going to drive prices down, is unemployment. And that would be quick unemployment. Big numbers on unemployment. I'm not going to try and get into what those numbers would be, but big numbers in unemployment, and that's what would cause, foreclosures. But foreclosures take a long time to go through the market. Foreclosures can take anywhere from 9 months to many years to get through the market. If there was a flash flood of brand new foreclosures, the banks don't just put all those on the market. Now, also, if you're talking nationally, you've got judicial foreclosure states and non-judicial foreclosure states. So that means foreclosures are treated very differently. In the judicial foreclosure states, they take a long time for foreclosures to go through the market. Now, non-judicial are going to be much quicker, but the same rule applies that banks aren't going to be flooding the market with foreclosures. Last time this happened, when you look at the 2008 crash that really took about 5 years, I was a broker back then, and we would see people stay in their houses without making payments for many years before the banks finally would release them as foreclosures and put them on the market. The banks, they don't want to see a neighborhood with a few hundred houses and get 30% of those houses go into foreclosure and all of them hit the market at once. That tanks the price. They want to keep the prices high, so they'll bleed those foreclosures out slowly over time. Now, without big unemployment numbers, how else are you? That big unemployment is what would cause inventory to swell. Without big unemployment numbers, how are we going to get inventory to swell up? Right now, I'll show you some numbers in a minute. We're at a few months of inventory. We need a stable market. An average market is around 5 to 6 months of inventory. So to get above that number to see those price drops, that's a tough sell. That I don't see that happening. Now, one reason is even if we start to see interest rates come down and sellers then start putting their houses on the market, every one of those sellers, most of those sellers is also a buyer. So yes, that seller puts their house on the market, I guess, to increase inventory, but then they turn around and buy a house and take one off of the market. So that's not really a net inventory increase at all. It becomes more economic activity. We see more sales for sure, and you might see some sort of a rise in inventory, but you would have to see inventory up around the 7-month or 8-month range for you to see those prices coming down. So those two things, if you want to see if prices are going to come down, watch unemployment and watch inventory. Both of those numbers are pretty publicly available, or you could just watch my channel. I'm going to be watching those over the next few months. Obviously, in real estate, I'm going to be back into doing my market reports to show you guys those numbers. Now, let's talk about the Spokane market specifically. But first, my name's Brian Johnson, and I'm a real estate broker with Windermere Valley, Liberty Lake, right here in Spokane. I've been a broker my whole life, well, since 1991, but not always in this market. I started out in real estate in Seattle. Then I moved to Denver for about 20 years, and I was a real estate agent there. And then about 7 years ago, I moved here, became an agent with Windermere. Love Windermere. That's my job. So let's jump into the stats and let me show you what's going on right now in Spokane. So one of the big things people are asking is, what is the price? I mean, what's going on with the price of real estate? And what's the median price? Don't worry about the average price. You want to look at the median price. That's the middle price. Now, looking right here, you can see this is Spokane County, and the average is going to be in the gray bar, and the median is in the blue. So we're at about, now this is just for the month of October. This is not the whole year. Just the month of October, we're about $399,000 is the median sold price in Spokane. That's all of the county, and we're talking single family houses and condos on less than 1 acre. Now you can see on the West Plains, we're at $402,000. Liberty Lake, we're at $455,000. In the Valley, we're at $420,000. And north of downtown, North Spokane, all the way going up, we're at $359,000. And South Hill, and going down around there, we're at $410,000 is the median sales price right now. Now, just since I did reference this, like what's the year-to-date median price versus just the monthly? So Spokane County, year-to-date, the median sold price right now is $410,000. That's a pretty high number. You can see a little bit of fluctuation in that coming down. You did in October, but we also have a typical slowdown coming into the winter. Certainly at Christmas, it's just cyclical, seasonal stuff that we see with prices adjusting a little bit. On the West Plains, we're at $401,000. Liberty Lake, we're at $500,000 a year to date. In the Valley, we're at $439,000. In North, we're at $358,000, and South Hill, that area, we're at $450,000 is the median price year to date. Now, days on market's a pretty good indicator, so that you know how long houses are sitting there on the market. So this is going by area. You can see the numbers right here, but you want to look at the blue, which is the median. Median is the middle. Average can be kind of a skewed number. So if you want to know the real sort of the heartbeat of the market in numbers, you want to look at the median. So the median days on market all county is 14 days. West Plains, we're at 18 days on the market. Liberty Lake is down to 12 days is the median days on market. That is really fast, you guys. All these numbers are fast. 14 days on the market in North Spokane. In South Hill, that area, we're talking 13 days, median days on the market. That's only 2 weeks, you guys. That's really, really fast. That means you list a house on Thursday. You basically have a weekend. Then the next week, might be looking at offers. You might have one more weekend. And then, 2 weeks in, that house is off the market. Median time, right? That's median. That's not every property. We are seeing the higher price properties are taking some pretty decent price adjustments, but in the median price range and below, they're not. Now, one thing I see oftentimes people comparing numbers and knowing stats, people are worried. They say, well, look at the average income versus the average sales price, or even you look at the median income versus the median sales price, or if you look at median rent versus the median sale price. That's not really fair numbers to compare. The median rent is on a two-bedroom, maybe about a one-bath apartment that's about 800 square feet to 1,000. Comparing that to the median price of a house, that average median house is probably going to be 3-bedroom, 2-bath, 1,800 square feet with a garage. That's not really a fair comparison, you guys, to compare those two in pricing like that. Now, one thing also, when people say, well, look at the average income of a renter versus, the sale price, I'm going to say something, you might not like it, but the average single income renter, this is historically speaking, so I'm going to talk historically speaking, that average single income renter stays a single income renter. Now, it's not always true nowadays. You do have people being business owners making money a lot quicker. Or, we all know nurses out of nursing school can make really good money. Travel nurses can make up to $200 an hour. So there's certainly outliers to that. We all know people that are outliers to that. But your typical, historically speaking, first-time home buyer is a dual income home buyer, buying at that median price. So just remember that when you see a lot of the scare tactics on other YouTube videos, or even people, I see it on Facebook all the time, they're just kind of really panicky and worried about what's going on in the market. There's a lot of money sloshing around in the market, for one, and people usually find a way. If you make an offer on a property, a lot of times we can really get the sellers to help out on those closing costs, buying the interest rate down, to buy the payment down, to get that payment in a qualifying amount. So just don't always look at the gross, big top end numbers. Now, this is a year-on-year comparison for the average days on market. Again, it's residential single-family houses, less than an acre in condos, 8.5 days on market for this year. But look at this trend line going back over the last quite a few numbers of years. This is not just simply going to change overnight. You're not going to see us back there in that, it's really not going to see 89 days on the market. This trend line over years is going to stay in this trend. Now, this right here is homes on Acreage, and it's broken down by size of acreage right here. So again, Spokane County land on Acreage, but let's just look at the median sold price, which is going to be the bottom bar, the bottom set of bars down here. So when you look at the darkest blue on the bottom, the median sale price is for 1 to 10 acres, and that is about $599,000. Then when you jump up from 10 to 20 acres, that median sale price is $615,000. And then when you jump up to 20 plus acres, that median sales price does take a big jump up to $815,000. Now, this is the days on market for Acreage again. So looking here, you can see look at the median, which is going to be the gray right here. The median for 1 to 10 acres is going to be 18 days on the market. Yeah, that's so fast to sell acreage properties like that in 18 days. It jumps up a little bit from 10 to 20 acres up to 21 days. And then it takes a 1 day, barely a jump up on 20 plus acres to 22 days on market. Now, this graph right here, unfortunately, is presented, I would say, backwards. The time scale on the left starts at 2023. On the right, it goes to 2018. But this is the closed sales in Spokane. Look at this. 2018, we had 688 closed sales in October, and the number varies a little bit. 21 during COVID and all that, we were up to 731. This month, or actually last month in October, we had 433 sales in Spokane County, closed sales, 433. By the way, we have about 2,800 agents. So if that tells you anything about what's going on with the market and the scramble out there, that's who's taking the hit. Is brokers are really fighting. There's a lot of brokers fighting over fewer deals, fewer closed sales. We're not seeing prices take a knocked down. We're just seeing fewer sales because we have so much less inventory. We have buyers in the sidelines waiting to jump into the market. You guys, right now, interest rates, they were about 8%. We've taken a little bit of a drop down in interest rates. As those interest rates go down, you're going to see a lot of buyers jumping back into the market. We have buyers just waiting on the sidelines that just need a little bit more interest rate decrease, and they're going to be jumping into the market. That's what I talk about, the real estate market crashing up. Interest rates go down. Yes, you will see some sellers put their houses on the market because they're trapped right now. You have a 3% mortgage. You're not going to move to a 7.5% mortgage, even in the same house, the same style, the same price range, and have your payment go double. So a lot of people are trapped in their houses. Interest rates start taking the nosedive and going down. Yeah, you will see sellers putting their house on the market. But like I said earlier, they're also going to be net buyers, and they're going to be taking a house off of the market. So those sellers become buyers, they're a wash, they put their house on the market, they take one off. But interest rates, if you see interest rates down around 6.5%, what you're going to see is a flood of buyers coming back in. And there's not going to be any inventory for those buyers again. We're going to see multiple offers on a big scale. You're going to see people doing things like no inspections, and just that's not healthy for the market. We don't like it. That's what I talk about crashing up, is the real estate market could crash up. You want to see a problem in the wealth difference between in America, that distribution that we talk about, and the inequality of wealth. If interest rates went from 8% down to 5%, a $900,000 house would probably pretty quickly jump up to $1.4 million. You're going to see that same sort of ratio throughout the entire market if you had a sudden, and I mean by sudden as in 6 months, interest rates, sorry about that beat, a sudden interest rate drop down that low. It's not going to be sudden. Interest rates usually take longer to go down that low. We are in sort of different times. We'll see. But that's what I mean by crashing up, is that you're going to see prices take a serious jump up if interest rates take a serious jump down. Now, just for an interesting look at financing types, if you want to know who's financing what kind of properties, we're seeing right now, like in this pie chart right here, the bottom blue section is conventional financing, at about 52% of all sales are conventional financing. And then up in the upper right quadrant, you can see FHA is only at 16% of all sales are FHA. VAs are about 9%. And then all cash, this is a big number, you guys. All cash is 21% of all sales in Spokane County is all cash. That's a big number. That's what I mean that there's a lot of money sloshing around in the market out there buying properties. Investors are not afraid of this market because they know what I just said about crashing up. Investors, a lot of these all cash sales, that's a lot of money going in and buying properties. That's not people necessarily speculating on interest rates. It's just, it is what it is. Also, we have a larger number of investors purchasing on the market right now than we used to. Non-owner occupied has taken a big jump up. I don't have that stat here. I will dig that one up for my next video. Now, we've talked about days on market already. That's going to be the bottom of this graph, but that's not what the part I want to show you. I want to show you this top line up here at the top. So that top line is what's called the list to sale price ratio. So we're hovering, we've been above 95% for years now. And what that means is say you list your house at $400,000 and you get an offer of $400,000. That means your list to sale price ratio is 100%. There were times over the last 3 years that we would see that as high as 104%. And that's that bidding market. But anything above 95% is definitely a seller's market. So people are getting most of their sale price. Now, there might be more concessions going on right now. So those concessions aren't factored into this number. This is the list to sale price ratio. People would rather give a concession than lower their price. Also, as a buyer, if you're thinking of buying a house, take a concession before you just take a drop in sale price. Talk to us about the numbers on what it means if you're going to be owning the house long term. Now, in the old days, people would, on average, own their house around 6 to 7 years, and then they would sell it. That number's dropped up. That number is shot up to 10 to 12 years is how long people are holding onto their house. I expect that number to stay in that range, especially right now, because people are trapped. Like I said, they're trapped in their house and they can't sell it. Now, I was talking about inventory earlier. This is the inventory right now. This is going back about a little over a year. You can see it's just going up and down, but you can see right here that we're at 2.6. This is on the far right side. We're at 2.6 months of inventory. That's not enough. Healthy market, around 5 to 6 months of inventory. Are we going to go up even more from here? We might go up a little bit because we're going into Christmas, we're going into the winter. We typically see a little bit of a slowdown in the market. But I'll bet you anything, when I do a video in March on market reports, we're going to see this back down below where we are right now. Now, this is just sort of the closed sales by price point in Spokane County. Again, it's single family houses on less than an acre. In October, we had 3 houses sold above $1 million. We had 1 house between $950 and $1 million. 3 houses between $900 and $950. You can see the distribution here on these numbers, but going down, what you can see is obviously the median is where most of them are, at 81 down here. But look at the 350 to 400 below median. We have almost the same number of houses, or right below the median number at 80 houses. But look at the bottom 2 tiers. 200, the very bottom one is $200,000 to $300,000. We had 70 closed sales. So again, that's like I say, when people are like talking about, the middle sale price, the median sale price of a house at $400,000, who can afford that? Well, not everyone can afford it, but that's just the middle price. Not every house is selling for there. So you can see right here, between $200,000 and $350,000, we had about 140, what was that, 70, 140 some, I don't want to do the math while I'm recording the video, but that was, 140 around there numbers. I'm sorry, I just didn't pull that one off the top of my head. But that's still a lot of houses that are being sold in that more reasonable price range. Now, a lot of these at 200 to 250 are going to be fixer-uppers. There might be might be a lot of those all-cash buyers are coming in. You might not be getting FHA financing on a $220,000 house right now, but I'm just showing you guys that there are houses right now selling at a more reasonable price. Don't always just listen to like the scare tactics on the news or on other, Crash Bros YouTube videos. I hope that helps you guys. If you have any questions about real estate, my contact information is below. Feel free to reach out anytime. And watch more videos on market reports, because I think things are going to start getting pretty exciting.